Alright, what's up guys? Happy Sunday and welcome back to the channel. So as always, we're going to do what we do and cover a few squeezes here. So on the main watch list, we got the S&Ps, the QQQ, Netflix, Tesla, a couple semiconductor stocks, and the big tech stocks. And then on the secondary watch list, a couple clean names off the scans, JP Morgan, TJ Maxx, and Visa. So we'll jump in, and first things first, Mama market herself. The S&Ps closed up on Friday at a pretty big spot, the old 42 hundo. So therefore, the big question for the week ahead: can the bulls finally get the job done here and break above that 4,200, and maybe, just maybe, get a party going back towards the August highs, right around that 4,350. Now, as far as I can see, from my perch, the bulls have got everything they need to actually go on ahead and get the job done. Up here on the Big 3 indicator, we have buy signals on the weekly, the 3-day, the 2-day, the daily, the 4-hour, the 2-hour, and the 1-hour time frames. And then down here on the squeeze labels that I've been playing around with all weekend, we have a bull squeeze, so a squeeze and a buy signal on the weekly chart, the 2-day chart, and the daily chart. So if anything is going to trigger that breakout, it would be the domino effect from the nested squeezes. First comes a daily squeeze, then comes a 2-day, and then eventually the big whopper on the weekly. So over here on your daily chart, alright, everything looks pretty solid. We got the squeeze, we got the buy signal, and then on your 2-day chart, we're also coiled up over here in a 2-day squeeze. Alright, a blue dot and a green arrow. And then from the top of the mountain, you get the big weekly squeeze. So again, guys, here's the thing. They've got what they need. The squeezes, alright, on the weekly, the 2-day, the daily, there's your compression. Alright, what the squeeze does is tells you we're gearing up for a big move. What the Big 3 indicator tells you is your structure, your trend, your momentum. Everything leans in the favor of the bulls. So when those two things come together, a squeeze, and your structure, your momentum, and the side of the squeeze is bullish, pretty good chance that squeeze fires to the upside. Then if you can find 1, 2, 3 squeezes at once, again, that's where you get that domino effect. One squeeze fires, then the next, and then the next. And if you look at a chart of, say, Amazon, LRCX, or AMD, those are some pretty good recent examples of that nested squeeze. So from here, folks, one of two things happens. The ball is in the court of the bulls. So like my man Jason Tatum, they are either going to take it to the rim and throw it down, or they're going to turn the ball over. The fun part, of course, is showing up Monday through Friday and figuring it all out. But being that trading is a probabilities game, for now the probabilities would suggest your 2-day, the daily, and the weekly squeeze have got a pretty good chance of firing to the north. So there's the S&Ps. Quick peek here at the Qs. And the Qs have been pretty solid. Pretty big week here on this end last week. Alright, continuation of the breakout. So as far as the Big 3 signals go, it's all pretty bullish. Buy signals on the weekly chart down to the 1-hour chart. Now, one thing that we don't have here are any fresh bull squeezes heading into tomorrow. So at this point, the QQQ is a little bit more continuation. Alright, you had a daily squeeze. You had a bull squeeze over here on the 2-day chart, and those have already fired to the upside. So phase 1 of the squeeze is build up your energy. Phase 2 of the squeeze is release your energy. And the Qs here, they are getting busy during that phase 2. So QQQ looks pretty good. The S&Ps are shaping up for what I think could be a breakout. And then the ugliest of the bunch would be the small caps here, the IWM. And granted, it's still not pretty. However, a little bit of progress last week. They cancel out all the lower time frame sell signals. They crank out 1, 2, 3 closes back above that daily 21. We get a positive shift on the Big 3 histogram. And what might give the small caps a little bit of ammunition for a push higher here this week could be the fresh bull squeeze over here on the 4-hour chart. That triggers to the upside. It is going to lend the IWM a little bit of a hand. So small caps aren't anything to write home about, but they are a little bit better. And then last but not least, you got the Dow and all 30 of your Dow stocks. And the best thing the Dow's got going for it would of course be the bull squeeze over here on the weekly chart. So 2, 3, 4, 5, 6 weeks down the road, Dow goes on ahead and fires a squeeze here to the upside. Good for the overall market. So there's a look at the indices. At least as of Friday's close, no warning signs, no huge red flags. You get the QQQ moving and grooving. You got the small caps making a little bit of progress. And you got the S&Ps coiled up in a handful of squeezes, right under what's going to be a pretty big level of resistance. But yeah, guys, from here, if that daily squeeze fires long, we take out that 4,200. The domino effect should go on to trigger that 2-day squeeze. And then I would think if you actually get that weekly squeeze to fire long, very much like the QQQ has already done, we should be boogieing back towards the August highs around 43.50. So we'll see if that's the case, or we'll see if the bulls just totally fumble the ball here. But alright, as far as the watch list, the exciting part of the video. So last week we bought some call debit spreads on Netflix, and as tends to be the case, when a stock gaps up and runs 10%, we took profits there on Thursday. Kind of tough to turn down a big push like that one day into your trade. However, I don't think the party's over here. So we have buy signals on the weekly, the 3-day, the 2-day, the daily, the 4-hour, 2-hour, and the 1-hour. So she leans a bit bullish. And then as far as squeeze action, we are still coiled up here in that weekly bull squeeze. So again, I know I am repetitive, but domino effect. Last week, the daily squeeze officially fired long. Your bull squeeze over here on your 2-day chart, all right, that officially fired long. The squeeze-a-roo on the 3-day chart, that fired long. And from here, if you can fire that weekly squeeze, I think a good initial target's going to be $400. You got the daily 200 SMA, which of course is always a big level, or the weekly 200 SMA rather, right up around that 405 neighborhood. Now, as far as trying to get an entry here, that might be the tough part. I think the best entry going is when you find those squeezes, and you're buying your calls or you're selling your puts right near that daily 21 EMA. Once the squeeze begins to fire, it's a little bit more playing the continuation game. So point being, I'll buy it all the way back down to 350. All right, I'll buy it all the way back down to that daily 21. But chances are, if everything works as advertised, it might be a little bit too strong. So what you might look for an entry could be your first pullback to, say, the hourly 21 EMA. You pull back to your hourly 21, you find support, you consolidate, and then the trigger for an entry off of that 21 EMA would be some buy signals on a 5-minute or a 15-minute chart. So Netflix is shaping up here. We took a good chunk out of that bad boy last week, but I don't think the party's over. So fight for a good entry, position yourself for the weekly squeeze, and we're looking for $400, maybe a little bit higher. So that's Netflix. Next up here is going to be Tesla, which, not the prettiest name out there, right? There's things that are stronger, there's things that have much better structure, there's things that are actually in uptrends. But Tesla does make a little bit of progress last week. So a couple things here. On the big three labels, you have 4-hour, 2-hour, 1-hour, 30-minute, 5-minute buy signals. We've cranked out 3 consecutive closes back above that daily 21 EMA. We're printing a new daily squeeze. And on the histogram here, we're getting a fresh momentum cross. So that all kind of bodes well here for a push towards... Well, here's the thing. We got a pretty big level here at 180. All right, so 180 is the 21 EMA from the weekly chart. So first things first, we have to break above and close above and then stay above that key 180 level, but from there, I would look for a push back up towards 200. Right, big, sexy, psychological number. So for tomorrow's session, depending where we open up, of course, the only bull squeeze we have at the moment, over here with that blue label, is the bull squeeze on your 5-minute chart. So potentially that squeeze fires long, pushes things back towards Friday's high, and from there, if you can break out, I do think the stock begins to open the door for a push back towards 200 bucks. What I don't think you want to see by any means is a close back under that daily 21 EMA. All right, so above 170, they might be working on something. Above 180, I think we're pushing towards 200. Back under 170, the thing's a total dud. And at that point, we'll want nothing to do with her. So tomorrow I'm going to watch the 5-minute bull squeeze here on Tesla. Give me a close above 180, and we might be in business. All right, and then for the semiconductor stocks here, the one that we traded going into last week was Lam Research. And what you're going to see in a lot of the big tech names, a lot of the big semiconductor names, is that, of course, you had a huge push last week. And mind you, it's always nice to catch that first push. But if you go look at a few of your bigger time frames, some of the squeezes haven't even fired long just yet. So for Lam Research here, the daily squeeze did fire long last week. The 2-day squeeze officially fired long last week. The squeeze on the 3-day chart hasn't fired long just yet, nor has a squeeze here on the weekly chart. So for a name like an LRCX, or say a name like a Broadcom, who also has a nice bull squeeze here on your weekly chart, if they can pull back a bit, if you can find a good entry, what you're trying to do is plant your seed and strap yourself in for the ride when that squeeze finally fires. Meaning, don't look at an LRCX and think to yourself, man, I missed the whole move. All right, I didn't buy it last week, I didn't get into it last week, and after a huge push like that, the party's got to be over. I think for now, not the case. I don't want to buy it up here at 600, but on any decent flush, right, as long as the structure, as long as the signals up here all continue to lean in the favor of the bulls, you try to buy that dip, give your trade enough time to position yourself to eventually see that 30-minute or that 3-day and the weekly squeeze fired to the upside. So it's a good old-fashioned buy the freaking dip game plan. So I would look to buy the dip in LRCX, I would look to buy the dip in Broadcom, and then AMD here. A bunch of buy signals up there. So if you look at the 2-day squeeze, that did fire long last week, but I think it got plenty of gas in the tank. The rule of thumb, once the squeeze fires, you're looking for 8 to 10 bars of momentum. So being that you're only 2 bars in, if you can get a pullback, if all the structure, all the signals remain bullish, you buy that pullback, looking for that squeeze to eventually keep it going. So that all looks pretty good. Let's check out NVIDIA. But it's a pretty simple game plan, guys. Buy the dips until proven wrong. And NVIDIA, of course, fired their 2-day squeeze, and you have earnings coming up on Wednesday. So that shall not be dull. But yeah, I'm liking the semiconductor stocks, and then on the big tech names here, it's all kind of the same, guys. So Amazon, for example. All right, big push over the last couple of weeks. Daily squeeze fires to the upside. But if you look at, say, the 2-day chart, very much like AMD, the squeeze just begins to fire to the upside. So catch a pullback, make sure everything holds structure, looking for a continuation. So that is the game plan. See if the S&Ps can break above 4,200, and if we do break above 4,200, I think from there they're going to carve out a path back towards those August highs. All right, and that path back to your August highs, at least in my game plan, would give me the green light to continue to buy the dips in the AMDs, the Amazons, the LRCXs of the world. Or the other alternative is we completely fail here, and we never see 4,200 again. Always a possibility. But alright guys, we'll wrap it up here with a couple things off the secondary watch list. First up is JP Morgan. And you got a good amount of bull squeezes here. So you got buy signals on the weekly chart all the way down to the 1 hour. And you have a bull squeeze on the weekly chart, the daily chart, the 1 hour, and the 5 minute. So domino effect. 5 minute squeeze fires long. Gets a good pump going. That could trigger the 1 hour. The 1 hour could trigger the daily, and then eventually the weekly chart. So a good handful of nested squeezes on JP Morgan. For Visa, we have buy signals on the weekly, the 3-day, the 2-day, the 4 hour, 2 hour, 1 hour, and the 5 minute. With a bull squeeze on the weekly chart, the 2-day chart, 4 hour, 2 hour, and the 1 hour. So first goes the 1 hour, then the 2 hour, then the 4 hour, so on and so on. MasterCard here is a little bit similar. Actually, I take that back. Visa's a little bit better. And then we've got Marriott. Not a nested squeeze setup, but it did come up on the weekly squeeze scan. A classic combination. Weekly squeeze and a weekly buy signal. But for what it's worth, the Netflixes, the Amazons, the Googles, the Teslas of the world tend to get a little bit more of my attention than a TJ Maxx or a Marriott. But alright guys, that is it for tonight's video. Keep an eye on that 4,200 level over in the S&Ps. Look for continuation out of your squeezes in the semiconductors, the big tech stocks, and Netflix. And we'll see what's up this week. So as always, thank you for watching. Do me a favor, if you found the video helpful, hit the like and subscribe button, and I'll talk to you in the next one. Adios.